Hello everyone, welcome to this week's Global Market Outlook. I'm Tolga. Today I will review the past week's market developments where the S&P 500 and Nasdaq both saw consecutive weekly losses, bond yields continued to slip, and Bitcoin dropped further. Then preview the week ahead, including the US jobs report and the European Central Bank's upcoming rate decision. Let's get started. In stocks, the S&P 500 ended down about 1% last week, while the Nasdaq fell 3.5%, its second straight drop. The Dow was an exception, edging up around 1%. The tail end of February proved challenging for equities overall, with the Nasdaq retreating 4% in the month, the S&P 500 down 1.4%, and the Dow off 1.6%. Meanwhile, the 10-year US Treasury yield slid from 4.42 to roughly 4.19% amid increased investor caution about growth and inflation. Crypto markets also struggled as Bitcoin lost another 12% for the week and finished February about 18% lower, settling near $84,500 on Friday. Corporate earnings, however, offered some positive news. S&P 500 companies posted an average fourth quarter earnings gain of nearly 18%, significantly above initial forecasts, with financial seeing a standout 56% jump. Consumer sentiment took a hit, dropping from 105 to 98.3 in the Conference Board survey, which respondents attributed largely to inflation concerns. Still, the Fed's preferred inflation gauge, the core PCE price index, is slightly to 2.5%, though it remains well above the target level. Looking ahead, the spotlight is on Friday's US jobs report. January saw 143,000 new positions, marking a slowdown from December's 307,000, although unemployment improved to 4% from 4.1%. This week also features the ISM manufacturing and services PMI surveys, factory orders, and foreign trade data. Depending on how these figures land, markets will reassess expectations for future Fed policy moves. In Europe, investors await the ECB meeting on Thursday. Analysts widely expected a 25 basis point rate cut, given softer inflation readings and sluggish economic data across the Eurozone. Final Q4 GDP figures and other indicators will add color to the region's growth outlook. In Asia, Chinese manufacturing PMI inched into expansion territory, and fresh trade data could show whether global trade tensions are cooling or intensifying. Australia's fourth quarter GDP and Japan's updated PMI and consumer sentiment numbers will shed light on those economies' rebound potential. On the geopolitical side, trade disputes between the US and major partners like Europe and China remain unresolved, leaving investors braced for policy shifts that may affect global supply chains. Diplomatic efforts surrounding the conflict in Ukraine also bear watching. Any progress or breakdown in negotiations could ripple through commodity prices and overall market sentiment, especially in energy. That's your snapshot of last week and a brief roadmap for what's ahead. If you found this update helpful, please like, share, and subscribe. I would love to hear your thoughts in the comments. What do you see as the biggest market catalyst in the coming days? Thank you for joining me, and I will see you in the next Global Market Outlook.